Q4 is lining up for one of the strongest runs we've seen in years. The conditions are already falling into place, but not every token is coming along for the ride. In today's show, we're going to find out what makes the token stick and why the majority just aren't going to make it. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. Welcome back to the show. In today's show, I'm going to walk you through the setup for Q4 and why it looks so bullish. And more importantly, why this cycle is different. Because the market isn't rewarding promises anymore. It's rewarding proof. September has a bad reputation, often stumbling mid-month during what's called the quad witching, when a stack of options and futures contracts all expire at once. This generally spikes volatility. But split the month into two halves and a clear pattern shows up. Most people say September is Bitcoin's worst month. It's not. It's actually August. September just gets the worst of the PR. Since 2010, if September the 15th to the 30th closes green, Q4 is green 88% of the time, averaging 135%. If the middle of September to the end of September closes red, Q4 is green just 25% of the time. So you can see this signal is clear. When the middle of September to the end is green, Q4 is generally bullish. For context, the market closed at 115,300 on September 14th. That means if the second half of the month is above that level, that is the green light for Q4. The macro backdrop only adds fuel. The S&P is at all-time highs, gold's at all-time highs, and the Fed just cut rates at the highs. Historically, rate cuts at the highs are bullish, and especially if you zoom out, they're very, very bullish. That's the backdrop we're working with going into Q4. We've also got the Altseason Index. Every time this index has stayed above 75 for 7 days straight, it's triggered a true alt season, lasting generally 6 to 8 weeks, but 2 to 12 is the range. Total 3 has also broken out, but the real final boss is in the Total 3 chart, excluding stablecoins. Stablecoins have grown so massively this year that when you strip them out, alts have actually hardly broken out. And that's the level to watch. If it flips, that's when true expansion can begin. And right now, the setup does look primed. Last cycle, a rising tide lifted everything. Garbage tokens pumped, but this time is different. The rising tide won't lift all ships. Only the tokens with real demand and mechanisms that push value back to holders are the ones worth compounding. The rest are just getting left behind. Look at the winners. BNB tied exchange revenue to buybacks and burns years ago. That flywheel is still compounding value today. One of the only tokens to make a true newer high. And if we look at the breakthrough apps of this cycle, Pump Fun, $800 million in revenue so far since they started up. That's the fastest startup to reach that number ever. PolyMarket doesn't even have a token yet, but its usage is so strong, it's being valued at close to 10 billion. When it does tokenize, the market will expect this value to flow to token holders somehow. And of course, we've got Hyperliquid as well, leading the _PERP meta, proving a DEX can operate just like a SEX and still reward token holders. We've seen other PERP DEXs cling on to this narrative. AVNT ran this week. ASTER might look like it's a genuine competitor backed by 𝗧𝗍 and Binance of all people. I also put out a guide to farming Lighter, another PERP DEX, back here in April. Check that out if you want some details on that. But the common thread here is product market fit plus a mechanism that rewards holders is the reason tokens keep climbing. But here's the flip side of this. Inflation is a tax. Take Solana. Price is still under its old all-time high, but market cap is almost double. The network's bigger, but if you weren't staked, you've been diluted. It's the same with Athena. The token price is down 50% from the highs, but market cap is higher because supply ballooned. Projects grown, but unstaked holders paid the price. Network value can rise while token holders get poorer if nothing flows back to them. Now, there definitely are tokens that have structural built-in demand. Think about Mantle. Mantle's got a consistent buy pressure now from Bybit. It's one of the reasons I covered it back here in this show and put it as one of the top tokens in my portfolio. It's backed by a company that have been making enormous revenue in crypto, and now it's used in everything that they're doing. It is essentially an exchange token. We've also got digital asset treasury companies deploying enormous capital into token, especially when you look at Forward Industries plowing 2 billion plus another 4 billion raise into Solana. Probably that is enough to actually drive Solana to new highs, despite the staking inflation that the network has. But these requirements of digital asset treasury companies or some inbuilt mechanism to drive value back to holders is essential, and most tokens do not have it. In my opinion, tokens that are lacking this are going to continue to struggle, and I don't see Q4 as a life raft to save them. I think the losers will continue to lose and the winners will continue to win. That's what we've seen every cycle in crypto and traditional markets. Value tends to accrue to the top. Yes, you get a few runners here and there, but the majority continue to struggle. They make lower highs and lower lows against Bitcoin, and if they're not beating Bitcoin, what's even the point? And there's one simple way to check if your token is strong. Is it trending up versus BTC or ETH? Is it above its 2024 highs? If the answer is no, that is actual weakness. And in a market that's bullish, weakness usually stays weak. So yes, Q4 looks bullish. If we can see a positive closing September, again, another tick in the box of a strong Q4 is likely. But this cycle is different. A rising tide isn't going to lift all ships. The winners are proving it with usage, cash flow, and value flowing back to holders. Everything else is just getting left behind. And that's the lesson. Play strength, not hope. You need to stack the deck in your favor. Betting on something different happening just because it did 4 years ago is not creating the best risk-reward environment. This cycle has already shown what it's rewarding. It's best to listen to it. So that covers today's show. Do you think we're gonna see an everything pump in Q4 or whenever this market cycle does come to a peak? Personally, I don't think everything's gonna pump. I think we've already seen tokens hit new entire market cap highs, and that might be enough for them. If they're making lower highs, personally, it's not going to be something I'm betting on. Thanks ever so much for watching, you guys. I shall see you in the next one.